Welcome back to the Financial Phenom. I'm your host, 10-Bagger Prodigy, the only market guru who believes buy low, sell high is just too mainstream. Today, we're diving into the wild world of Wall Street, where stocks go up, down, and sometimes just sideways, confusing not just you, but also themselves. Whether you're a Wall Street wizard or someone who thought bear market was a wildly for reserve, strap in. We've got everything from blue chips to those mysterious crypto chips. Are they even edible? Let's find out and tackle today's market mayhem together. The US saw a boost in retail sales for December, beating what everyone thought would happen. This should have been good news for the market because it shows people are spending more. But oddly enough, the market didn't take it well. This could be because investors are worried that all this spending might push prices up too much, leading to higher interest rates. Also, sometimes even good news isn't good enough if investors were expecting something even better or are unsure if this kind of growth can keep going. Other big-picture issues, like worries about the world economy or political drama, can also make investors nervous, overshadowing good news from home. Different business sectors react in their own ways to this kind of news, and sometimes people just decide to cash in on their investments after hearing good news, especially if stock prices have already been going up for a while. Lastly, the stock market can be fickle, with its ups and downs sometimes driven more by mood than hard facts. Today's market vibe was pretty bearish, thanks to the latest retail sales figures. This news sparked a bit of a rally in yields. Remember how I mentioned in yesterday's recap that the market was ripe for a pullback? Well, Federal Reserve official Christopher Waller's comments really added fuel to that fire. The S&P 500 felt the heat and closed at 4739.22, down by 0.56%. After hitting a high on Friday, we've seen a bit of a slide down to the 200-day moving average, but there's a glimmer of hope with a potential reversal candle. Now, we're all wondering, is the market going to trap the bears with a sudden jump, or are we going to dip even lower? The tech sector, QQQ, had a better day, ending at 407.21. It's showing a promising hammer pattern on the daily chart, so we're all asking if it's going to brush off that double top and head for new highs. Yields did climb, but haven't crossed the 4.2% mark yet. If they do, it could be a red flag for the market, Bitcorn's recent peak notwithstanding. The dollar's playing it cool, sticking close to its 200-day moving average. The big question is whether it's got enough oomph to break through and stay up there. VIX, our go-to gauge for market volatility, did what we expected by crossing the 1458 level, hinting that stocks might start sweating a bit. But it seems to have run out of steam, also showing a topping candle. It did manage to hold on to that 14.58 level though, which makes us wonder if the S&P 500 is gearing up for an all-time high. Apple closed at 182.68 and is hugging its 200-day moving average. If it drops below 180, we might see it slide towards 167. Tesla put up a good fight, ending the day with a nice hammer candle at 215.55. It's clinging to its support level at 212.36, making us wonder if the rally's still on. AMD closed at 160.17, and it's looking a bit peaky. But if the market flips, it could climb higher despite some bearish signals. Now let's talk crypto. Bitcoin's chart is showing a bear flag on the 4-hour. The bears are eyeing a break below 41,000 for a deeper dive, but if it climbs over 44,000, that bear flag's out the window. MicroStrategy is just biding its time in its daily channel, watching Bitcoin for cues. If it dips below 460, things could get interesting. But that all hinges on Bitcoin breaking that 41,000 mark. And finally, my favorite ticker, affectionately dubbed Mrs. Pussycat, really delivered. It's at a critical point now, especially with earnings on the horizon. The big question is whether it'll keep sliding down to fill the gap and maybe land us a sweet deal. Hats off to those who jumped on this trade with me. As we wrap up today's trading extravaganza, remember, the market story isn't over just yet. We've still got some juicy data on the horizon and a few more Federal Reserve members ready to drop their financial wisdom or wizardry. Looking forward, all eyes are on the initial jobless claims report due out at 8:30 a.m. tomorrow. This little piece of economic puzzle could be the game changer for our next trading adventure. If you're loving these daily dives into the market's rollercoaster ride, why not join the family? Go ahead, hit that subscribe button and ring the bell. You know you want to. Your support is the secret sauce that keeps our market insights fresh and sizzling. And hey, don't forget to check out the link in the description. That's where you'll find my Twitter, or as I like to call it now, my X handle. Follow me there for real-time updates, market musings, and maybe a meme or two, because why not? I'm your friendly neighborhood 10-bagger prodigy signing off for today. But fear not, I'll be back tomorrow, armed with more market wisdom and maybe a coffee or two. Until then, stay sharp, invest smart, and let's keep riding the market waves together.